Now, oil producer club OPEC and its allies failed to agree on moving its planned June 9th and 10th meeting to today, despite the recommendations by Algeria, which holds the rotating presidency of the group. But what will this mean for oil prices in the near term? And I have Kola Karim, he's the chairman of Shoreline Group, and he joins me now from London to discuss this story. Thank you so much for joining me on the show, Kola. Like I said, what would all this mean for oil prices in the near term, and should that OPEC meeting not hold this week or on the 9th or 10th?
Thank you, Kenneth. The problem is we're in shaky grounds still, very, very shaky grounds. If you look at what has happened the last 10 days, there's been the expectation that the global market is opening up, and that's helped the price movement on the upward swing. But if you see the situation, unfortunately, that is happening in some spaces, but in the United States, if you look at what's happened to distillates and the overstock of distillates, is this issue that's happened last week with Mr. Floyd, and that is shutting down with the continuous rioting and people protesting. Is stopping people from driving, so the consumption of gasoline, etc., and products is not entering the market, and that in itself is creating a big choking block into the marketing system, and that's putting fear again and is slowing down the market.
All right, but looking at what it means for prices, though, I'd like to get your take on the price developments we've seen in the past 2 weeks and how we've seen that rally come up, and how you see things playing out after the meeting, if OPEC holds that meeting.
I think the commitment from all parties, this is one price crash that's hurting everyone. So everybody has put their whole hands on deck in saying, guys, we have to be committed to this cuts. And rightly so, it has worked, and it's been working. We've heard it. They are going to extend, with the way I see things, going till July. But it's what I call a game of cat and mouse. Everyone is watching the other party because trying to gain an advantage. If you look at Saudi Arabia last month, they even went for further cuts. In as much as what they committed to, they went for further cuts in trying to help raise the market. But the true position is everyone is watching their position because it's hurting across board. If you see what's happened, even Saudi Arabia, with the buildup of their cash reserves, is having to introduce VAT. So it tells you, when you look at countries like Nigeria and the smaller OPEC partners and producers, you can imagine the depth of this pain right across board in the industry.
All right, but looking at Nigeria, like you likely mentioned, I'm trying to understand Nigeria's oil future. Recently, we saw data coming from the DPR talking about Nigeria's oil reserve dropping to 36.89 billion barrels. Also, they also put out the figures for gas as well. You know, what does it say for Nigeria's oil future?
Look, Nigeria's oil future is always been entangled and tied to this PIB. Look, the reality is there's got to be clarity to potential investors into the Nigerian market in seeing the economics and the mechanics of how the returns on the investment, dollar invested. And that's key, critical. And this is what the industry's always been saying. This is what the industry's been pushing. The passage of the PIB wholesomely will give clarity to potential investors into the Nigerian market. We must remember, Nigeria is not a standalone country today. Oil is now found in every nook and cranny, and gas of the world. So reality is the fastest time we turn this around in making and opening up Nigeria as a potential market for effective dollar return investment in the oil and gas sector will be a very good enabler in trying to drive Nigeria's reserves. Who is going to invest in a market if you do not have clarity on how your returns will work? And this has always been the chicken and egg situation in trying to get a proper balancing on what will help Nigeria becoming the appealing factor to investors in the oil and gas sector.
All right, but still talking about investments into that space, though, we're talking about marginal fields coming on board now, looking at new licensing round for there. What do you make of this licensing round, and how do you see things playing out?
I think it's a very, very good step by government. It's a very, very good thing. First and foremost, the marginal field is for local operators who are interested in the industry. Number two, what is important is the marginal field itself is going to be a rallying call in trying to help energize the local producers in Nigeria in building that catch up in expanding their production. Look, as it says from the announcement, there's 57 marginal fields that's going to be put on the market. Just imagine if those 57 could come onto the market. Just imagine if those 57, even if 50 of them produce 2,000 barrels a day, that's an additional, think about it, 100,000 barrels that's been put by local producers into Nigeria, and it then drives further income. Don't forget, the marginal fields are assets that's been drilled, worked on, especially by majors, but is not been deemed by them to being commercially viable. And over the years, I think anything over 10 years has not been worked on and been left there. So this is finance, this is money that could help fuel and drive support into the Nigerian economy that's been locked in. And if this could be done through this marginal field round by getting smaller players interested, investing into this sector, it would help deepen the knowledge and know-how that's been in Nigeria for over 60 years, and more importantly, available capital chasing the smaller projects to try drive and deepen the oil and gas sector also in Nigeria. Thirdly, also is the know-how. Technology
Right.
transfer that is abound globally is a good thing that this also would help energize that sector. So the marginal field is a bid round is a fantastic opportunity for Nigeria and Nigerians to focus on the industry.